VWAP in combination with the RSI as a trading strategy would make you a lot of money in any market if you know how to use it correctly. This is because it tends to identify areas of high win rate value and gives highly accurate entry signals, giving you an opportunity to be one step ahead of other traders. So make sure you watch this video all the way through to the end, as I will be revealing in full how to actually make use of these indicators in the most profitable way. I'll also be showing you what to avoid if you really want to become profitable. Don't forget to like, subscribe, and turn on those notifications so you don't miss out. Now, without further ado, let's get into it. Okay guys, so in today's video you need to navigate over to TradingView.com, and we're going to be looking at the euro versus the US dollar on the 5-minute time frame. I will be going over this super indicator combination that makes a lot of winning trades. So for the first indicator, we will need to navigate up to our indicators tab and type in VWAP, or volume weighted average price. So the VWAP is a technical analysis tool used to measure the average price weighted by volume. This indicator is good for scalping, as it determines the overall direction of the price. It is similar to moving averages in the way that when the price is above the VWAP, the price of the assets are rising, and when the price is below the VWAP, the price will be falling. This indicator is good on its own, but to get more accurate readings and to make more money while trading, we need to introduce our second indicator. Our second indicator we will be adding to our chart is the wave trend oscillator, but for it we need to type in indicator wave, and it is this one here by Lazy Bear. This will help us to achieve more accurate entries in the financial market and also filter out bad signals. How this indicator works is by identifying areas of overbought and oversold zones. It's just like the RSI, only that it gives you a lot more accurate signals. So we will be using this indicator to identify more sustainable points of entry for our buy and sell signals. Now, before we get into our entry requirements, we need to make a few changes to our indicators. So first, let's double click on our VWAP, and we're only going to be changing our band color here from green to red. Then down here on our bands fill, we're going to be changing this to white. Now for the wave trend, just double click on this, and we need to change our first plot here from gray to white. We'll also increase its opacity here, and then we're going to go ahead and remove all of these plots except for these two. These two plots are our moving averages, and we'll also be changing this one from dots to a line. I'll also increase the size of the line to make it a little more visible. Now that we've got all of that out of the way, our strategy is complete, and now let's look at our trading rules. Now, for a buy entry to be valid, we first need to see the wave trend moving average cross below our middle band. So we got our first cross at this point. We would now want to wait until we see the green moving average cross above our red moving average. Also note that we only need one of the moving averages to cross below our middle band line before we wait for the trend moving average to cross over. We see we got it at this point, and we now need to check our VWAP indicator, as we would want to see the price closing above our blue line. Once we have all of these conditions met, we would be opening a buy order on the close of our trigger candlestick, bringing our stop loss down towards our most recent swing low, and targeting 2.2 times the risk. And we can see that this was a successful trade. Here we have another buy trade we would have taken, so we see that we have our wave trend above our middle band line. We have to wait until we get across below the middle band line. At this point, we would have to wait for the green moving average to cross above our red moving average. And we see we got the cross at this point. Then for us to actually get our final confirmation to open our trade, we have to check over our VWAP moving average, as we would want to see the price action close above our blue moving average. And once we have all of these conditions met, we can safely enter our long position on the close of our trigger candlestick, bring our stop loss down towards our most recent swing low, and once again targeting 2.2 times the risk. Another successful long trade. We see that once again we had a pullback into our VWAP. We are actually closed above it, and we got another cross on our moving averages. So this is another valid long entry, bringing our stop loss down towards our most recent swing low, and once again targeting 2.2 times the risk. The exact opposite is true for short trades. We first need to see the wave trend moving average cross above our middle band line. So we managed to get our first cross at this point. We would now want to wait until we see the red moving average cross above our green moving average. We see that we got our bearish cross at this point. We're then now looking up towards our VWAP indicator, and what we're looking for here is we would want to see the price action close below our blue line. Once we have all of these conditions met, we can safely enter our short position on the close of our trigger candlestick, bring our stop loss there up towards our most recent swing high, and once again targeting 2.2 times the risk. And we see we had another successful trade. So here is another sell trade that we would have taken. So we see that we got our cross above the middle band line. We then need to wait till we see the red moving average cross above our green moving average. At this point, we want to see our price action close below our blue VWAP line. We're then opening our short trade on the close of our trigger candlestick, bringing our stop loss there up towards our most recent swing high, and once again targeting 2.2 times the risk. Another successful trade entry. I hope you have understood the rules for this strategy. Let's now backtest it with an initial account size set at $1,000, and we'll be testing this over 100 trades. Okay, so the backtesting is complete, and now here are the results. The win rate for this strategy turned out to be 68%, which is really good for such a high risk to reward ratio. We managed to increase our account size by 473%, and we managed to find those 100 setups within 2 months. The profit factor was 4.31, and we had 7 consecutive wins against 5 consecutive losses. Any new trader can try this strategy immediately to have a shortcut to a better scalping experience. If you do have any questions, please ask them down below in the comment section. If you enjoyed the video, please leave a like, comment, subscribe, and turn on those notifications so you don't miss out. I love you all. Peace.